Hello, Mavericks. This is Rob Reinbold. Just nice to see you here again. It's October 27th. Let's go ahead and jump in just a few days before Halloween. And I gotta say, the tech stocks look scary, but everything else actually looks pretty good. And so when we break down the day we saw today, let's first of all start off with the news. We had news about earnings. So earnings was the big thing. So Caterpillar, let's take a look at Caterpillar. Caterpillar came out. Everyone loved the news, and you can see the stock had a huge jump here and held on to its gains for most of the day. So a nice jump here, moving up into earnings, and you can see a nice jump higher. So Caterpillar was really good. The Dow Jones opened up about 1.3, 1.4% higher. By the end of the day, it had sunk a little bit. But let's take a look at Meta. Meta was the disaster of the day. Take a look at it, down 25% in one day. That was like $60 or $70 billion. You can see just a big drop and no buying. No buying after that big drop. We had a candle with no body. That means it closed right where it opened. And you can see there was a little run all the way up to about 103, and then it was sold off quite a bit. Now take a look at the price action going into these earnings. At Maverick, we are big trend followers. And we say that when things come out and have news and earnings, they're likely going to follow their trends. So take a look here. Meta was already in a downtrend. It dropped lower. And then we go back to Caterpillar, breaking up out of a 20 and 50-day moving average. They crossed. Everything was saying bullish, and we got some good news. So if we go back to see, okay, what happened today, we take a look and we see the Dow was up 0.6%. Now, this was off of its high. The S&P down 0.6%. This was also off of its high. The S&P was up about 0.4% at the open and then sunk. The big story was the NASDAQ, because the NASDAQ opened about down 0.4, 0.5%. It actually went positive at one point and then really sold off all day long to finish down 1.6%. And so take a look at it. The big question is, where's this market going? Because as far as for the first 4 days of this week, we've got the Dow Jones, it's up about 2%. The S&P is up a little bit, and the NASDAQ is now down for the week. So here's the big question, and this is the question I'm going to continue to ask until we get an answer. Is tech going to ruin this market rally, or is the market rally going to hold tech up? So let's take a look at the charts here. We take a look at the SPY. We can see that we've got another rebound all the way up to the 50-period moving average. We got our little hammer candle yesterday, and we've got a red candle here. So look, this is very classic pivot point action where we had a run higher, 3 very strong days, hit a resistance level, got a reversal candle on Wednesday, and we got a confirmation candle here today. So at this point, we expect there is going to be a little bit of movement down from this point. However, we are now solidly between the 20 and 50 period moving average. This is what we call no man's land. We say, hey, you know what? You don't really know what to do with the market when it's between this period. We think it is likely to drift down a little bit, but we aren't looking for any real serious sell-off here. However, when we come over here to the NASDAQ, we got a little bit of a different story. We had the NASDAQ that came up to this point. Monday was an up day. Tuesday was an up day. Yesterday was terrible. Again, we had bad earnings from Google and Microsoft. And then you can see this is just a nasty candle. So here we are looking to trade below the 20-day moving average. I'm going to jump to what's happened after hours. Amazon took a huge fall after hours. At one point, it was down about 15 to 18%. Just rallied back a little bit. We'll take a look at them in just a second. And we also had Apple fell a little bit after hours. So the next candle is likely to be another down candle. That's going to take us below the 20-period moving average. And that's telling us we are very highly likely to retest somewhere in this area. When we take a look at the S&P, it says, hey, it actually doesn't look too bad. We're in this no man's land. It could be up, could be down. When we come over here to the NASDAQ, it looks more down. And if we really take a look inside this market, I love this heat map because this heat map shows you the weightings. Now, what the weightings means is how big of a weight it has in the S&P 500. So this is the S&P 500 right here. And you can see that Apple is the largest weight in this whole thing. Microsoft, Google, Amazon, Meta. Look at those 5 stocks. Those 5 stocks are about 20% of the entire S&P 500. When all of those get crushed, it's brutal. Let's take those 5 out. You can see that it was actually a pretty decent day across the board. We had good strength in some of the financials. We had really good strength in the industrials and in the consumer cyclicals. So everything actually looked pretty good outside of tech. So that brings me back to the same question I asked. Is tech going to sink this market? Or is this rest of the market going to hold up and pull up tech out of a really nasty place right now? And I'm going to tell you right now, I don't know. I'm going to be waiting and watching, but I think right now it's a pretty easy call. You want to be short tech and you want to be long everything else. That's a pretty easy call here in this market. I'm going to just review where we were over the weekend. We had gone to a -1 in the market, so a mildly bearish leaning overall. But we did think it was going to be an up week this week. We did think we were going to come all the way up to that 20-period moving average, that 50-period moving average, which we did. So we have 1 period left, likely to be a down period tomorrow based on what's happening after the bell. So let's take a look at a couple of potential trades here. There's a lot of stuff that looked really good on the long side, and there's a lot of stuff that looks good on the short side. This is a really good trader's market. This is a perfect kind of market for what we do at Maverick with basket trading, where we're always making a lot of trades. We're always long some stocks, short some stocks, sideways some other stocks. As long as you can find out where the trends are, you can absolutely capture these. On the long side, this is CEG, Constellation Energy Group, and we've been having this one on our watch list for quite a while here. We had a high base that broke out back here in September. We liked it. I know a couple traders caught that. It's been pretty much going sideways for that period of time. Now we have broken out up to that next level with a really nice gain today. Now look, this is a utility energy play. So look, 5% a day, that's big. I expect this thing will settle into the high 90s. This is where I really like diagonal call spreads, really like some credit spreads to the bullish side, because I'm not sure it's going to run to 100 in this market, but I do like the fact that it's probably going to hold above 90. So I think there's some good opportunity for some mildly bullish trades here. Next, I cannot believe I'm about to say this, but this is Robinhood. And, I wrote Robinhood off for dead as all of the market was just punishing stocks like this. But take a look at the price action. Robinhood is saying to us, it wants to go higher. Look, I don't think Robinhood's a great company. I don't particularly love the business model. But when I take a look at the stock, none of that matters. All that matters is where's the price action going? And you can see we're building an ascending triangle pattern here. I don't know if we're going to break out of this resistance now. Maybe we have one more pullback before we break out. But Robinhood actually looks really good for a long here. I think an 11-12 vertical spread, and give it enough time, give this at least 4 to 5 weeks of time, because the market is really dicey here. But if we get any sort of up move in the market, I think that's what propels this Robinhood to break out and run above the 12 level. So I like this trade quite a bit on the long side. Again, cannot believe I'm saying this, but look, as a trader, what does it matter what I personally think about the company? I'm not in there to care about that. I'm in there to care about price action. And I'm trying to identify the stocks with the best upward, downward, and sideways price action. And this is one of them. On the sideways side, this is BTU. This is Peabody Energy. They do natural gas. And here we are. We are stuck. We are stuck in a range. We've got flip-flopping moving averages. They don't know where to go. We are stuck here between 20 and 28. I like this as a sideways trade just at 24. And frankly, I think that's the trade. The 20, the 24, 28. November, butterfly. And as long as it doesn't really break out to the outside or to the downside, this is going to be a profitable trade here on BTU on a sideways trade. And then for the bearish trades, you can go back and take a look at the list I have, but the way I compiled this list is we use screeners at Maverick. We don't have any watch lists. We think watch lists are a thing of the past. You still have a watch list, really consider dumping it. It's just a dumb idea. We have screeners now because you just simply put in, hey, this is what I want. I want to find a stock that's doing this. You don't need to have a watch list where you're watching some all the time. You literally get a new watch list with every screen and every scan. So I actually said, give me the stocks that had the worst performance over the last quarter, but the best performance over the last week. That was my screen. Give me the stocks that have been the most garbage stocks out there, but have had the biggest bear rally bounces. And this was one of the best ones, Novavax. They are a vaccine maker. Check this out, 17 up to 24. That is a crazy run. That is 40%. A 40% run in 4 days. This is what you do on these. Anytime you get these crazy moves, they're great little short opportunities. So I think I'm going to do something like a 2023 bear call spread. Very much liking the spreads here in this higher volatility environment. If you want to do something a little bit more conservative, a 21-23 bear call spread would work just fine. But again, I just wanted to go through the process of finding potential trades, as using those screeners are great. You just have to think about, okay, I want to find the stocks that have been the worst over this year, but have had the biggest rallies over the past week, month, 2 weeks, whatever it is. Put that in the screener and you can find these. So let's talk about tomorrow. Now again, this is my question. Will tech sink the broader market? And right now, tech looks terrible. It looks so bad. However, the rest of the market looking good and it's holding up. And this is a broad-based rally that isn't one or two stocks holding it up. It's pretty much all the market except tech. One of these is going to break. And I don't know which one it is. And here's a great thing as a trader. I don't need to know which one it is because I'll just trade it when I see it. Right now, it's an easy call. Be long industrials, long financials, long some of the consumer names, and short tech. And that's just the trade right now. Overall, one of these things have to break. Either tech is going to break the market and send everything down, or tech might stay a little bit weak and the rest of the market's going to move up without it. And then eventually tech will bounce with it. One of those things is going to happen. Let's talk about tomorrow's economic reports. We've got the PCE price index. This is the Fed's main inflation indicator they use. So this is going to be an important number. They're looking for up 0.5% and 5.2% year over year. We've got a couple other little reports, but nothing too big. And earnings. Now, a lot of these earnings are already out. Let's go over those really quickly. Amazon, as you can see, took a big tumble from $110 all the way down to about $88. You can see we've climbed back up to only down about 15% after hours. So Amazon has definitely led the market lower after hours. If we take a look at Apple, so you can see Apple dropped originally on the numbers, came back up, but at this point is actually trading off a little bit. T-Mobile had a nice jump higher, trading after hours up about 3%. And then you guys can go check out the rest. So after hours, we definitely have a negative tape. I expect we're going to see the market gap down again tomorrow. Now remember, this going into a Friday, markets rarely bottom out on Fridays. Markets usually bottom out on Mondays and Tuesdays. So if you're hoping for a bounce tomorrow, I think that you should take your hopium into the weekend and come back on Monday, Tuesday, where it's going to be a little bit more likely that there's a bounce off the bottom. But of course, the market can do anything, so we'll see. That is the Market Roundup. Thanks for joining me. This is Rob. Take care. Goodbye, everybody.